Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. We're going to put the spotlight on value ETFs now with our ETF research director, Nina Mishra, who joins me from Zacks.com. So value is still in, huh?
Yes, you know, last 2-3 years, particularly last year, investors favored all those glamorous stocks,
the
high flyers, which had a higher growth potential, but also came with higher risk. And investors were willing to take on more risk when Fed's easy money was available. But now, as the Fed is withdrawing its massive support, the focus is returning to fundamentals, and investors are getting increasingly worried about the pace of economic growth or the health of corporate earnings. And we have seen that in the past few weeks, some of these high flyers have taken a hit. They have fallen out of investors' favor, and investors' focus seems to be returning to those boring, stable stocks with solid and predictable cash flows. And I think we are seeing some sort of a rotation from momentum to value stocks, and this trend may continue for some time.
So the moral of the story is, despite all of the gyrations, investors favoring this or that at any particular time, over the long term, value still holds up.
Exactly. I mean, this may be, this rotation may be a shorter term trend, but if you are an investor looking at long-term investing, then value stocks definitely should have a position in your core portfolio. Because many academic studies have revealed that value stocks outperform growth stocks over longer term in almost all the markets studied, and they outperform with lower volatility too. So for long term, they deserve a place in your portfolio. And if you're a long-term investor, you should also look at expense ratios, because expenses may not matter that much in the short term, but if you are a long-term investor, expenses can really matter a lot in your investment portfolio. So that is why for long-term investors, I recommend these value ETFs, which have a very low expense ratio.
Okay, well, as always, you have a couple of examples that you brought with you. One is the Schwab Large Cap Value ETF, right?
Yes, the ticker is SCHV. It tracks large cap stocks with value characteristics from the broader US large cap index. Financials occupy the top spot in the portfolio with almost a quarter of the asset base, but consumer discretionary, industrials, and consumer staples also get double-digit allocations. It is the cheapest option in this space with an expense ratio of just 7 basis points, and it has a Zacks rank of 2 buy.
Okay. The other one comes from Vanguard.
The ticker is VTV. This is one of the largest options in the space. It has assets under management of about 30 billion, and it is also one of the cheapest, just 10 basis points in expenses per year. This also has financials as its largest sector, with about 28% of assets invested in financial sector. In terms of holdings, this ETF as well as the earlier one that I mentioned, they are pretty well diversified, with top 10 holdings accounting for just about 26 to 28% of the total asset base. This is also a Zacks rank 2 buy ranked ETF.
And do you own either of these two?
I don't.
Okay, check out other ETF material, interesting articles, commentary, you name it. It's in the ETF section of Zacks.com. So if you're not there already watching this video, then go to the homepage and link right to it. With Nina, I'm Terry Ruffalo.